So I'll start by saying this is a fairly difficult question, but if we really think about the whole process involved with a consignment relationship and how the consignor, which in this case would be Koff, would ultimately record the journal entry to record this consignment relationship, I think it will really all come together and you'll see exactly how the company should record this type of transaction. So in the first sentence, it says that Koff had inventory costing $72,000 on consignment, right? So that's what the inventory is worth to Koff. Now, they transferred it to the consignee, and the consignee sold 2/3 of that for $80,000, right? So Koff is getting $80,000 of revenue on this consignment relationship. Now, they also had to pay $7,500 to ship that merchandise to the consignee. Now, I know we talk all the time about freight out being a period expense and not a capitalization expense for inventory, but in this case, because it's a consignment relationship, we will capitalize those freight costs onto the consigned inventory. Now, Koff is also reimbursing the consignee for $4,500 of advertising expense, and then they're also going to pay them a 10% commission on the consignment sales, which is that $80,000. Now, ultimately, we need to figure out the net profit or loss from the transaction for the year, right? So we're going to go through 3 steps to calculate the profit generated, and then I'll also show you the journal entry that Koff would record for this transaction, right? It'll really help this all come together. So again, the question said that 2/3 of the inventory was sold, right? But we only know the total cost of the inventory was $72,000. And we also have to add in that $7,500 of freight out that's capitalized only for consignment relationships, right? So that means total consigned inventory would be capitalized at $79,500 on the balance sheet. Now they sold 2/3 of that, right? And you can't really just do like 0.66, right? Just do 2 divided by 3 and then multiply that. And ultimately you get consigned inventory sold of $53,000, right? So that's going to be the cost of goods sold, and that's the amount of inventory that Koff will need to remove from their balance sheet. Now, Koff also has to pay commission to the consignee, right? So the consignee revenue was $80,000 times a 10% commission rate. That means commission expense that Koff will have to pay is $8,000, right? So that's going to be an expense for Koff in the income statement. So now in step 3, we can calculate the gain or loss on this consignment relationship, right? So the revenue generated was $80,000. The cost of goods sold for the inventory that was sold, which was only 2/3 of it, was $53,000. Commission expense was $8,000, and then they reimbursed them for advertising expenses of $4,500, right? So that tells us the profit generated is $14,500, right? Now that's what the question is asking for, so that's going to be the correct answer. Now we're going to take it one step further and really think about the journal entry here, right? So as you can see, here's the journal entry. I don't want you to focus too much on that first account, accounts receivable yet, because that's ultimately going to become sort of the plug here. So let's focus on the credit side first. So consignment revenue is $80,000. It's a credit because it's for revenue, right? And then we're going to credit inventory for that $53,000. Now there's still going to be consigned inventory in the balance sheet, but this inventory credit, right? That's removing it for the inventory that was sold. So that's the credit side. Now on the debit side, we'll skip that accounts receivable still, and we need to debit advertising expense for the $4,500, right? Because that's being incurred by Koff. Cost of goods sold on that inventory was $53,000, and then they also need to debit commission expense for $8,000. Now ultimately, the consignee would owe Koff some money for the inventory they sold, but they would likely back out the commission expense and the advertising expense. And that means that really Koff would only receive $67,500 from the consignee, right? Because they've got to reimburse them, they've got to pay them their commission, but ultimately the consignee collected the cash on those sales, right? So that is why we have a debit to accounts receivable for $67,500. So that's the full journal entry. Hopefully this really helped all of this full transaction come together, because this is extremely important and it's hard to understand the individual pieces if you don't understand the overall transaction and the journal entry that would be recorded.